Yo, 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 hello, 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 hello. All right, I have to get this video out or I lose my mind because a lot has happened and a lot needs so many different. I'm just all this. All right. Still think we're bullish. We made our last video right here, CPI print, April 12th, and during the day actually. And we thought it could be the bottom. It was a possible bottom area. And it dropped that day. And then the next day, I made an edit in the description of the video saying that since this dropped like this shouldn't have dropped. If this was the bottom, the way this played out, this should not have dropped. It shouldn't have even filled the gap. It bounced off that and should not have dropped. The fact that it did drop shows that it wasn't the wave that I was looking at or expecting for this to be the bottom. And it had a possibility for a very violent drop the next. That's exactly what I thought. We were in the clear here. It bounced off right off of support here. This was literally my target up here. Literally called that I want to see some sort of a violent sell-off, gap down into the green line to the penny. And then it ripped huge off of it. Huge up day, up and to the right, up into the so we thought this was the top, and then this happened. I go, okay, it's gonna get that violent kickback. The reason why you expect the violent kickback is because this was not on the zero line yet. Not on the zero line yet. On this week. It touches it, and then if it goes up and closes up here, fills the gap on the weekly, that means you don't get a closing print on a negative the weekly. And it's very, very clean, healthy, and it's usually required. Not required, but it's very healthy and usually happens in a normal wave cycle. So we got the negative, got it. And then we get, because it was so violent and so much of a kickback, get the gap down. We got a lot of chop this week. We got the gap down. And it kind of activates. Then yesterday was a whole shit show. And then today happened. So it's like you're in the middle of all this chop. I think Saturday is actually trigger, which is the solar eclipse that happens. Sounds really weird, but we will find out firsthand how eclipses will actually direct the direction of the market. So you can believe it or you don't believe it, but eclipse November 19th happened right here, and it marked the top November 22nd, and this is when all the volatility started. Map it out with all your indicators, stuff like that, how this actually was peak momentum. See, like Microsoft, the eclipse happened right here, and then the next day it touches its trend line, and it was top. A lot of stocks actually top there. So if you take that for face value, this next solar eclipse is this Saturday, and it's setting up for a possible bottom going in the end of this week. So we end up having Thursday and Friday have Amazon and Apple earnings night going Friday. So I'm going to go through all the patterns and things out of what I think could happen and should happen, and what we're looking at here. I think this here is the opposite of this here. Low off top. So like this move here, we had the Fed announcement and we had a super violent move, and this random drop shouldn't have happened. This should have been the bottom. And they're getting this random drop and a huge rally in here. Like, okay, this was confusing because bullish, this shouldn't have happened. Right? So for bearish, ended up getting this move here, but we got the UVXY newsfeed right here at the bottom. For the first time since December 31st, the algo trigger. So that this triggered the market to the downside, and then it happened right here for the first time, nothing in between. So this triggered to the upside, which I actually think is synonymous with this. And then you get the violent drop, which I think is the opposite of this violent spike. It makes a lot of sense. It looks really clean with the wave dynamics because you're crashing into the zero line. Crash down, touches the zero line right here. And guess what we got here? Another news feed, UVXY. We got it here, and then we got it here. And it actually triggered the market to go up. Newsfeed came out literally right here. Came out like right here. So kind of just doing nothing, comes out right here, and then boom, triggers it. But it couldn't go up because there's all this down momentum. Apparently, allegedly, right? And that's the thesis right now, but we're still in this chop zone. So then if it activates and the residual move, and now you're in limbo, you're in no man's land right now. And then we'll go through why it did this and targets it hit on the Y and UVXY. We broke a low on the line chart. See, it's important. Low by like full margin. Something possible inflection point. Also this downtrend. People think we can go lower, and you could. If you drop lower, it has to go really quick like this. It has to like drop lower and go straight up. Like it can't stay here for longer than literally 1 or 2 days, 2 days, like at the max. Or it changes the wave, or if it drops down to this 400 gap, 402 gap, 7 gap, it's a way less likely for us to have a correction later in the year. And I just don't think that it doesn't happen. I think it does happen. I don't want to see this fall here. It would kind of mess up the wave dynamic. So anyway, come up, we crash into the zero line. You want to see an activation. We're getting volume. We've got a news feed. We also got a news feed here in SQs, 425. We got the reverse split here, January 13th. It triggered the correction. See, the next news feed you got was right here at report, March 24th, and it broke it. And look at it, 324 actually was the peak bottom. It actually trailed positive since there. Right? So as soon as it triggers, it goes up to the right. And then we got another one, April 25th. April 25th happened right here, the same day as the UVXY newsfeed. Lo and behold, it got smacked, goes up, fills this gap, get this candle here that looks like it's going to continue, but it ended up becoming exhaustion because of Facebook earnings. Right? So this is not healthy for the SQs. This should not have dropped. This should have exploded up because this looks like it's going higher, right? So instead, this looks like a corrective wave off of this, an exhaustion instead of exploding through, right? So that's one thing. Also, Facebook happened right here. Also, if you do the wave patterns, Facebook dropped this here, and we chopped, and then we did one more pop, and CPI cracked us, dropped us. Do the same fractal, drop. Facebook pops us, opposite of this, and I'm expecting one more final drop on Apple earnings. That's my thesis. If Apple earnings gets dumped, and Amazon as well, and I'll show you targets on Friday morning, and we'll go straight up from there. We don't go straight up from there. You're looking at the targets of this line here, testing it, 402 or 397. Other people have 380, which is like a head and shoulders pattern breakdown. Sets it up to go down 380. There's also a glitch trade at 364 from when it happened right there on the second day of the drop. If you get to 380, you'd assume you get to 364. It's very unlikely you don't hit the glitch trade. And I just don't see us going to 364. So there's just a lot of stupid stuff right now. I just really don't think we break down. The put call ratio hit the highest level since COVID the other day. It went to like 1.2. People are super bearish. They're super bearish right now. Everyone is like foaming at the mouth type bearish. I see a massive rally. So if you look at the VIX, let's see, the UVIX ETF came out on March 30th. Always talk about how ETFs come out right when they're supposed to, like the triple leveraged natural gas products got deleted right at the bottom of like a 20-year bottom. The oil ETFs got deleted right before oil crashed and then made this historic run. They always get deleted and appear right at the exact time. SARK appeared literally at the top of ARK stocks, and it went straight up, left, up and to the right. Just go straight up. So like they appear right when they're supposed to appear. March 30th. And when did March 30th happen? It was right at the peak, right? So it's like it appears right when it's meant to go, market's meant to go straight down. That's one thing that I'm a little worried about. Other thing I'm worried about with the VIX calls were bought, 70 strike expiring June, 21 puts were sold expiring June. And someone thinks it's going to go between 21 to 7 in the next month and a half. And those were made here. So that's something, in my opinion, a little worried about. The only thing I'm worried about, really, or like the quote unquote the breakdown for it, except this is reacting with it. It touched the newsfeed price, and this is when the other newsfeed came out, the algo trigger got rejected, went through it, then we got rejected. So we're literally flirting with this. We successfully break it, we get the bigger drop. If we get rejected, then we get the massive rally through all-time highs. And either or, even if we get the drop, I expect it to be very quick and the rally out to be very quick. I really just don't see the drop. So all I see is something like Facebook rally today, we do this, and then the market sells off violently on Apple and Amazon earnings, like gaps up to here, does something like so. Market gets wrecked, this pops up wherever it goes, and then comes straight back down. If it does that, it is the bottom, especially if it goes from deep red, 2, 3, 4% red to positive. That is a confirmation in my book. Apple targets, you have a fat broken downtrend. You're retesting it on a huge sell-off into a huge open red, oiled move. This is right here, goes down to approximately 147. Massive support on Apple. 142 is the middle Bollinger for the monthly, and last time it touched it was COVID. This is massive support. Previous all-time highs 138 coincides with that, as well as the 100 weekly at 136. If it can even get there. And what does everyone keep saying? That Apple is the barometer for the market, and I 100% agree. It always is. But you want to be aware that, like Josh Brown keeps saying, that we're in a bear market, and then wherever Apple goes, the market will go. And I completely agree. If the market sells off, we're going to tank. But you're buying this drop. This is not Apple finally sold off and we're finally crashing. It is definitely a confirmed bear market. It's not. Stop being stupid. This is literally like full capitulation type scenario right here, because the waves are set up for it. So we're looking for a possible drop here. If it rejects it, the drop, and it goes back up, you'll see it go back above 165. And that means that it rejected the drop, triple bounce off the 9 monthly, and this will have a massive rally out. Either way, if Apple just pops and rips, it's over. If it drops huge and then reverses, it's over. The thing that you'd worry about is if it drops and just keeps going down or just stays down. Then you just can't buy anything, or you can't buy anything. But this is not the time to sell. Not the time to buying everything. There's Apple. Amazon is another one. I don't think this is mega bullish going into this year. 200 weekly, it has not touched since the financial crisis. That 2500, 30, 2530 monthly. 50 monthly, 24.60. To get to 20. Hasn't touched it since financial 2000. Yeah, financial. Quarterly is at 2000. I don't know. But if it does, these are all massive support levels. If it gets there, great. If it just pops, great. Either or. These are targets you're looking to buying it, not selling it. So UVXY is probably the most important. You look on a weekly basis, the way it moves. This, you look on a weekly basis, how it the weekly keeps spiking into this. The weekly middle Bollinger is a huge level. It's the line in the sand, so to speak, for corrections, as well as the daily middle Bollinger for it. Third day, it stays above it. Rejected, rejected, breaks through briefly, and then hard rejected. You could see how it really got through it. Looks like it a short-term breakdown, like it wants to go, but it can't yet. And it tries again and fails, and then the fix gets a new right here, and it breaks it. It retests it, then it blows through it. Retests it. This is where we got the final correction. And this felt like a bottom. Very, very, very pessimistic. Oh my God, oh my God. This just feels like I said, it's an annoying correction. People aren't even that scared. It doesn't feel that bad. Generally, that's what a bear market would feel like. If you're at the same level as you were before, but you feel less scared, it's generally what you see in a bear market. That's how waves work. But I don't believe we're in a bear market. That's exactly the point. This would be an overextended move correction, so this would be a wave one market type. So here, it breaks through it and then gets rejected below it. It retests it, kind of, almost, 1, 2, 3, and then got rejected, and I thought we were in the clear. My target was literally this. Like, this is what I wanted to see. I made the line here. It's going to retest this, but then it didn't. And then it went all the way down here. I'm like, yeah, it doesn't look clean. I really wanted to see it. And then it did one of these. Whoop. And I'm like, okay. So this is one of those things where I think, right, if we're going to get the correction July, August, wherever this goes, this is the stabilizer to the upside. Rejected, breaks through it, and then fails. This is going to be such a big move. You need to stabilize up to allow for the drop and up. So what does it do? It looks bullish. It retests, loads up. It looks bullish, but it's not. It's like one candle stabilizer above the support. That's what it's there for, and that's what it does. I've seen it before. And what you would have to see is the rejection of it. This is something you really want to see it get rejected off of. S&P will go down to about 400 here. So the target, the time it touched it was here, just once from good. This, it should get rejected. If it goes through it, then you're looking somewhere between 30 and S&P will go down to like the 360 level. I just don't see it. Do not see it in the waves at all. It also got rejected on the monthly 9, 17.5, and the option 9, 17.14. It went through here, but now it's at 69 overnight. So it hit it, got rejected, went through it again, pulled back, and went through it today. Now it's getting rejected again. Okay. The way it's looking, based on this double neutral and this kickback, then we went. I think we're going to get some sort of a kickback, which I think is that, but to the upside. This was an overextension to the downside. Up, 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 up. As the market goes higher, this drops. You're going to see that reactive move to the upside. That's what I'm looking for. It have to happen? No. Happens. You know what to look for. You know. Lots of Tesla. At its 200-day, it crashed in last year's high. Good. Stopped here, broke down, broke above it. Now it's retesting it. retest all this. The weekly middle Bollinger 50, that'd be pretty. Love it. It's really bullish. 853 is really good support. Monthly already double bounced off. One's just ugly. Touches the 0 line in 2 to 3 days. So that's a huge trigger. That's a huge trigger you want to look for. Use they look like dog, but the Dow touches the 0 line. Touched it today. Touched it today. Looking for a violent move. I'm looking for a violent move to the upside tomorrow with failure, quote unquote fail sometime during the day, some sort of topping pattern. It rolls over, and at the end of the day, I want to see a violent spike up going into the close. That sets up momentum for the market to get crushed overnight and then to rally right back out of it on Friday. That's what I want to see, whether it happens or not. Rally straight up. Congratulations, like we got through it. But that's it, and then we'll rally out, and this should bottom. We rally through all-time highs. Finally get through all this nonsense. Also, this I noticed, DWAC looks like it's bottoming. Probably got a MACD cross here. This looks like bottom. It double bottom. This was alarm that went off. Happened the same day that the Twitter deal went through. Really violent spike out of it. All the other stocks that are involved with it, like fun stuff, all look really close to bottoming here. The MACD touches the 0 line next week, and then it has earnings the week after. It has massive support at like 1. So this is just really close to big. DWAC exploding, like I've said back in October, this exploded and the bottom, saying that they are going to explode. My target one stop, it's almost there. AMC arm today, 15 eyes are touching here. It read quarterly again. Something very, very, very imminent. Everything is very imminent. Everything is really imminent. Either this here or this goes 0 line month, or it goes right now. Everything is really simple. Everyone right there, MACD cross, and it affects it. Everybody is so bearish, so convinced. Bear market. And Josh Brown again said specifically, Apple sells off, we'll finally know if we're in a true bear market or not. It is a perfect example of a wave dynamic that's set up for a breakdown into a reversal. The people who look at basic technical analysis are going to get screwed. They're going to say, okay, I knew it. I am right. Market. I am staying defensive. Short. I'm right. And then they stay there all the way up to all-time high. They don't believe it because they finally had decided it's a bear market. And that's how capitulation works. That's how psychology works. So I'm sure there's more stuff I wanted to look at. This specifically, VXX, scary. This candle right here is a correction candle. Bounced right off support. This is the type of candle you get that starts a correction. So that, again, that's something that I would be worried about going into weeks. Coincides with the falls, the 70 strike on the VIX. Well, as other things, we're at this huge inflection point. Either way, you're buying into. You'll get the rally through. Well, nothing. Saturday would be the trigger. Saturday should trigger. You will see. Everyone will see. CPI print with lower inflation. Last report. The wave dynamics, earnings beat, companies beating, raising guidance this year, quote unquote valuations. Everything was thrown at the market and nothing catch a bit. Market just hold the rallies, right? And is it because of valuations? Is it because of Russia? Is it oil and blah blah blah? Or is it literally because stupid thing, all these stupid eclipses? And we'll find out. This will literally be the first hand because I've seen this for, I've literally seen this for years. I'm pretty confident it's good because it's setting up for a possible reversal going into the week. Oh yeah, and here's this: the VIX daily zero, the MACD touch line tomorrow. So it would make a lot of sense. Projected tomorrow, and then you're going to see an activation on Friday. So it explodes high zero line, gets rejected, and it activates the activation on Friday where it blows through it, which is quote unquote positive VIX. And so you'd be like, okay, well then the VIX is positive and the market's going to sell off. Yes, unless this day on Friday specifically reverses or very, very early next week has to find to reverse. And that means that all the VIX did was explode above the zero line and it maintains the momentum of the VIX in positive territory, even if it comes back down a day, a week, a month, and consolidates back down like this. The explosion above it, big way, maintains the momentum above it, even if it comes down for 1, 2, 3, 4 months. That's how waves work. How this is. That's what I think it's trying to break the uptrend, allow it to rally out, and then come down really hard later on. I've seen it before. This is how waves work, and yeah. So it's just really hard to tell people that. Oh, so you're telling me we're going to break down and then we're going to be bullish? How does that make it? That's how it works. This is why it's so hard to trade the market or tell other people what to do, because you're literally telling them something that makes absolutely no sense. But yeah, this is learned, and other people, it's not easy to have figured. Got a weekly MACD cross coming. Got hard rejected here. Hard rejected here. Now we're this pierces this, you will see the VIX go up to about 50 change. S&P around 380, yeah. Shall see. We shall see who's the winner. That's what you're looking for. Don't get too scared. Looking to buy it, or just buy if it recovers. If it recovers, you know, and trust me, it is going to be a huge rally. There's so much up momentum. So much needs for this trigger. Right? This was a long one. Needed to say it. GG's out there.